oil prices settled up more than 4%, extending last week's gain as potential OPEC Plus output cuts and conflict in Libya helped to offset a strong US dollar and a dire outlook for US growth. Saudi Arabia, the top producer within OPEC, last week raised the possibility of production cuts, which sources say could coincide with a boost in supply from Iran should it clinch a nuclear deal with the West. WTI is trading at $96 a barrel and Brent at $104 a barrel. Natural gas is also down by 1.5%. Meanwhile, the euro bounced from its lows due to investors now considering a larger than expected ECB rate hike. For more of this now, let's go to Craig Erlam, who is OANDA's senior market analyst in London. Craig, many thanks for being with us today. First of all, what is the outlook for oil prices? What's the trajectory?
Well, I mean, considering the comments that we had from Saudi Arabia a week or so ago, it seems clear that they have a minimum price in mind. And that's something that the markets have been wary of. But to see this said so explicitly, I think may have created something of a flaw in the oil price. Two of the big downside risks for oil recently has been the prospect of a global recession, which is becoming increasingly possible. And then also the prospect of Chinese lockdowns leading to lower demand on that side as well. But also, again, additional supply if we do see a nuclear deal between the US and Iran. Now, the fact that Saudi Arabia so explicitly talked about the possibility of an OPEC plus cut in order to offset any of these outcomes means that their downside risks have suddenly subsided quite considerably. And it seems that the group would like to see a price around that $100 a barrel, which is where we're currently trading.
Right, and then let's speak about natural gas prices, because I feel it's really a whole different story, and especially in Europe. I mean, Europe will have to deal with an energy crisis that won't be there in the US, really, or not to the same extent. And we know that the EU is to unveil emergency measures to curb soaring energy prices, especially to curb electricity prices. How successful do you think these measures are likely to be?
I guess that ultimately depends on the details which come with any announcement and when it comes. Clearly, the Commission wants to announce something relatively soon to try and ease the burden over the winter period. But whether they'll be able to announce any details of any significance that could have a considerable impact is hard to say. I think this winter it could just come down to various nations coming up with their own plans, whether that is what we're seeing in France, where we're seeing caps on the price that are sold to households and the additional costs absorbed by energy companies or the government, or whether it's something more like the UK, where a lot of the price is passed on to households and maybe some of the hardest hit then subsidised in some form. It's really difficult to say. Capping the price, though, is ultimately very difficult because there is no control over the supply. And therefore, as long as there is a direct link between the price of gas and the price of electricity, then it's going to be very hard to ultimately cap the price of electricity. One possibility that von der Leyen has suggested is decoupling that link between the price of gas and the price of electricity. But again, the details are going to tell us just how successful that can be.